We're solving a couple of problems really. So the problem that we identified early on is that businesses, especially kind of the small to medium scaling growth businesses, they're wasting a lot of money on subscriptions and SaaS products.
Yeah.
So SaaS spend is a company's third largest spend line in their P&L. So you've got rent and people, and then subscription. Over $1 trillion a year is spent on SaaS, and so much of that is wasted. So we spoke to customers, and they're saying, yeah, listen, all of our subscriptions, we know we're overpaying for them. We haven't got good visibility on them. We would save so much money if we could bring them all into a single play easily, but B, we were able to unlock some savings from the software providers as well. And there's almost like this frustration that they knew things weren't optimal, and they knew how much money was being left on the table in a way.
Matt, it's a pleasure having you in the show. Thank you.
Thank you very much for having me. Yeah, it's great to be here.
Thank you. Thank you. This podcast is all about how can we have more impact in customers' lives and also create commercial impact. So I like starting with purpose. What's your take on how can we build more purpose-driven fintechs?
It's an interesting topic. I think a lot of companies and fintechs in particular will start and not really think about the deeper purpose as to what they're giving to the end user. I think having a clear, why are you building this, rather than just building it and hoping people will buy it. What is the bigger picture here? Sure, there's a monetary element and a commercial element, but what is the kind of non-financial benefit or purpose of the product? I think having that clear from day one is super important. When we started Lemon, it was more about what we could achieve and do for customers rather than the product that we were about to sell to them.
Oh,
so I think about it's having what do you want to help people do? Like I said, commercial, or it could be it could be anything really, but as long as there's a tangible thing, it's almost like start with the customer's pain point and what are the problems that they're experiencing and build a product around that.
Yeah, I like how you phrased it, because most think the product first by default. And then given that you have this product in mind, you're like, no, but what are the customer pain points? But you phrased it in even forget about the product.
We didn't even start working on our product. We didn't know what the product was until after maybe 3 months minimum of speaking to customers. We had an idea of some of the theses we had and some of the theories we had around this sector, but yeah, we didn't write a line of code for months. We were just doing a lot of research. We were trying to figure out really what are the pain points that people want solving today, and then tailor the products around actually what they want versus what we think they want. So yeah, it makes it, and it makes life a lot easier as well. The process of trying to get customers onboarded into that product is much more straightforward because you've already spoken to them. Whereas you don't have to really sell them a new thing and tell them that this problem exists, because you built basically off their feedback. And I've done that in my last 2 startups now. I made that mistake the first time around, where I was like, just build a product and sell it to people. And it is always slow and quite difficult. So the last 2 has always been talk to customers from day one, write a line of code once you've done it, an extensive period of research and know what you're building essentially. And it sets you off on the right foot, I think.
Yeah, I like that. So then coming back to Lemon, what's your purpose and which problem are you solving then?
Yeah, so we're solving a couple of problems really. So it's a problem that we identified early on is that businesses, especially the small and medium scaling growth businesses, they're wasting a lot of money on subscriptions and SaaS products. SaaS spend is a company's third largest spend line in their P&L. So you've got rent and people, and then it's subscriptions. Over $1 trillion a year is spent on SaaS, and so much of that is wasted. So we spoke to customers, and they're saying, yeah, listen, all of our subscriptions, we know we're overpaying for them. We haven't got good visibility on them. We would save so much money if we could bring them all into a single place easily, but B, we were able to unlock some savings from the software providers as well. And there's almost like this frustration that they knew things weren't optimal, and they knew how much money was being left on the table in a way. And so we came up with a few ideas of how we thought that could how we can solve that problem. And actually, subscription management is one of them, but also what our customers said to us. We took this subscription management platform to them and said, listen, this helps you get way more clarity on your subscriptions. You can see how much you're spending, how many licenses you've got, which person owns that subscription, who's in charge of it, when it renews, how you're paying for it. Is it on your credit card? Is it on your debit card? All of that stuff. So we went to them and said, here's a subscription management product. And actually what they said after that was, oh, this is great, but can you help us actually save money on subscriptions as well? And so we had that comment come back to us quite a lot. And at the time, we didn't really know how to do that. And so we explored a few different angles. And actually, we found there's an opportunity to help businesses save on subscriptions, because you've always got this monthly fee and this annual fee with subscriptions.
Yes.
Annual fee is always 20 to 40%
More expensive.
than if you
Sorry,
pay.
cheaper.
Yeah. But the challenge you've got, as a business, you have to pay up front for that annual discount. So not many businesses have substantial free cash flow to just be able to pay for that up front. By default, they're paying premium just by paying monthly. So we said, okay, we can actually build a financing product that sits alongside the subscription management that says, we will pay the annual fee for you and you pay us back on monthly installments. So you're now actually keeping your monthly cash flow alive, but you've reduced the amount that you're paying back. So we effectively save a ton of money for a customer on a single piece of software. And then effectively by putting everything in a single place, they can take a bit more of a holistic view on those subscriptions and save money across the board. For example, we had a customer that just put all their subscriptions into our dashboard and immediately saw that there was a £400 a month saving that they could make by doing this, because it was duplicated and there was a load of things that they were double paying for. And so they're making a $5,000 a year saving just by putting everything in a single place. The crux of our purpose is to help companies spend less on a monthly basis, which kind of is what Lemon stands for. So Lemon, we took less and monthly and combined it to make Lemon. And so the whole premise is so you spend less monthly.
Cool.
Yeah.
Because that has a lot of impact in businesses as such. If you think
100%.
of a big bank, no, yes, but as smaller businesses, it makes a massive difference.
Oh, it does. And we actually thought it would only be the small companies that would benefit from this. But actually what we found is it's across the board. So bigger companies have exactly the same problems, especially when it comes to the financing piece.
Yeah.
And as you get bigger, you get more subscriptions, you have more departments, you have more people using subscriptions, and it gets really messy really quickly. So we went through that interesting phase where, like I said, we thought it would be really valuable to small companies, but actually the bigger one see value in both sides of it too, which is great.
And then I really want to know your thoughts on this, because you have a very exciting entrepreneurial career. Mm-hmm. So I've been in fintech since 2013, 14. So I've seen the evolution for 10 years. And then back then we were like, hey, banking is broken. Customers have a ton of financial stress. We'll come and basically do our bit. It's been 10 years. And now I say, yes, we've had impact. However, customers have even more stress, financial stress, than 10 years ago. So we have not had enough impact. Like, the problem statement keeps growing.
That is the issue, right? It keeps growing. The more you solve one problem and another one comes.
Yeah. So what do we need to do to have 10 times impact in 5 years' time?
So that's super interesting. I think key is really trying to not become like, you hear the references all the time, like this business is like an oil tanker or a cruise ship. It's big, you can't stop it, and it will just get through everything. But what that also means is that it can't turn around very quickly. So I think what you need is a fleet of speedboats rather than a cruise ship or an oil tanker, right? So you can do things at speed, but you can also go in slightly different directions. You can turn around, you can pivot, you can solve other problems relatively fast. You see, especially with early stage businesses, they'll try and become this big vessel far too quickly, because things change very quickly now. 10, 15 years ago, new technology coming into the market was a bit of a slower process. Now there's new stuff popping up every week. And so you need to be on top of that. You can't get set in your ways. And so I think, yeah, you need to have that mindset in your business that, yes, you want to go far and you want to go fast, but you also want to solve a lot of problems as they present themselves. Because like you said, things change. And you can't necessarily predict the change as well. COVID is a perfect example. Like nobody saw that coming. You just don't know that what's around the corner. So being set up to be able to adapt to that, I think, is really important. And as a byproduct, will help us have more purpose and solve more problems over the next 10 years and not be as kind of lagging behind. It just allows everyone to be at the kind of the forefront and chipping away at stuff. And there's a lot more technology availability now as well. So leveraging what's on the market to try and predict a bit of the future is something that we should be taking seriously.
Definitely. And I like the mindset because then you're saying, hey, we need to be operational flexible, kind of capabilities and operational flexible, but at the same time, be very open-minded to the problems that keep coming up. So do not get stuck in your ways of, this is the thing that I was doing. The problem statements will change faster, we think.
100%. I think previously, when you say, have you got product market fit? We're at this stage now, we can scale a business. Product market fit today is a bar that keeps on moving. It's not something that once you've got it, you've always got it. No. You might have it for 2 years, but then something might change. You've got to go find it again. So it is about having that agility and that understanding that things may change and being okay with that as well. Because again, there's a lot of stubbornness when it comes to business owners and founders in particular, where my idea is the best idea in the entire world, and they will be reluctant to change tack. So I think it's like the classic fall in love with the problem and not the solution, just so you can be more agile and try a few different things and see what sticks, because certain things that will stick today might not stick tomorrow and vice versa.
Yeah.
So yeah.
Cool. So if I go a little bit deeper, let's assume that we take this mindset and other things, and we do have much more impact in the next 5 years because we can, because exactly technology is evolving super fast. How, in the context of financial services, how good we measure that we as an industry did have that impact?
So I think it all depends on what impact you're trying to create. So in our case, you're trying to help businesses save money. The result will be businesses staying in business for a lot longer because they've got more cash, they've got better cash flow. It will be more jobs because they've got more cash to reinvest into their teams, into their people, into their organization, and not be paying crazy debt or whatever. So there's more businesses that are in business. And as a net result, the economy turns because more businesses create more jobs, which creates more money into the whole ecosystem, right? On the other side, we've got software vendors. So pay them up front as well, which is what we do. They can grow more. They can be more sustainable businesses. They can take their reliance away from outside capital and actually grow on their own terms. So you become businesses that can generate actually more profit, which I suppose it's a bit of a dirty word in tech, but more profit is good for business.
Good.
So yeah, yes. By doing that for a software company, they can generate more profit. They can be a bit more in control of their own destiny. So they can stay in business for longer. They can invest in more people. They can create more jobs as well. So the net benefit of this kind of financial purpose for us is that, and you can measure that quite high level, but I'm sure there's some data points you can build to say, oh, all the businesses that have been funded this way have stayed in business for 2 years longer than if they didn't get there. So that's probably in my direct thinking. There are other companies that they might have a climate impact, or they might have an ESG thing. So they're obviously managing things differently and have a different set of criteria. But you can't expect impact to be like an overnight thing either. I think there is a bit of, especially when it comes to climate, and it's not going to change the world overnight, but it chips away over a long period of time. I think you have to take a bit of a bigger picture, worldly view and say the benefit is going to be, we want it to be here. And if we can do 20% of that every year and it compounds, we're doing the right thing. And so, yeah, I think we can all have direct impact if we have this purpose at our heart and see the bigger picture rather than just the top line. I definitely think you can measure it in certain different ways.
I like that. Then the other thing that I love asking, especially to seasoned entrepreneurs, is people. So we cannot do these without people and leadership. And it's hard, right? Because people
It's
are
not easy.
people. People are
Yeah.
people. What's your secret? How do we build a culture that keeps people happy, driven, motivated? And like we do good for.
I think it comes back to having that purpose and that why from day one. So if you just try and bring someone in, say, can you build me a piece of technology that does this? It's very easy for them to just see the face of it and go, yeah, I can build that, sure. But actually, if they're bought into the why you're doing this, it keeps people, I'm not going to say motivated all the time, but it keeps them disciplined to keep working towards that global kind of mission. I think, again, a lot of businesses might leave this, and I've done it in the past, you leave it too late to really understand what your objective, your mission, your goal, your vision of the business is. And when it's too late and you start thinking about it, it's probably the time that you start to struggle in business. You know, oh God, all these people are leaving, there's a lot of conflict, people aren't aligned, like why? And that's when you start working on this kind of mission and vision piece. Whereas this time around, we worked on that pretty early on. So anyone that came in, and there's only kind of 4 of us full time and maybe another 3 partners. We had this clear objective, this clear why from the get-go, which makes it a lot easier for people to buy into the business itself. And it keeps them all attracted to that same goal. And not everybody is going to want to do the same thing, which is also fine. So you've got to find people that also believe in the cause and see where there's opportunity in the cause as well. And if I can do this, I can actually help this by X%. And so you find the right people who would back you and come and join you to build things, as long as you have something that they can attach themselves to. Whether you like it or not, business is quite emotional in the early stages. Where you need somebody to emotionally connect with you, your business, your mission, your purpose. You need somebody to really feel like that gets them driving as well. It's not just about a paycheck. It's not trying to earn as much as possible, because the chances are that's not going to happen. So you need to have a compelling why straight away. So I think I've learned that the hard way, and I've learned that over time. But it's been a lot more kind of straightforward this time around. Even when speaking to partners or banks or investors or finance people or customers, the message kind of rings true through all of those conversations, and it helps people really understand what we're about and what we're doing. And it helps them see past the products that we've got available today. So I think having that bigger picture, that wider ambition, that here's what this thing could become if we do this really well, it all helps with getting the talent and the right people in at the right kind of time. And like I said, again, there's no rush. Like, you shouldn't rush hiring, because culture is way more important, and the people within your business are way more important than the amount of people that you have in your business. The amount of people that work in your company is not a barometer for success. No. The quality of people that work in your business is a barometer of success. So I think that's how I've been framing it anyway.
Yeah.
It seems to have been okay so far.
Yes, but I think you raised a really good point. It is emotional. You need that emotional attachment. Like, I remember I'm in my second fintech, but I always said, it will get hard, right? Eventually it gets really tough. And it's like, that purpose, it's what keeps you going, instead of saying, I'll just go and get another job. It's more of you're connected to it. And even
100%.
now that I've been here for ages now, like almost 7 years. And people ask me, why are you still there? And I very bluntly say, I'm emotionally attached. But it's true.
But that's it though, like that you stem that into something, like that's your purpose. If you're connected to something, you're solving a problem, it doesn't matter if it takes 7 years or 70 years, your purpose is trying to solve that, right? And like there's much more merit in that, I think, than venture hopping every 2 seconds.
As we go deeper to materialize this purpose and these visions that we have, we need to build the product, right? So what makes a great product in your eyes?
One that is driven by the customer initially. Mm-hmm. So a great product, a lot of founders will listen to Y Combinator advice, and it's like, shit, the ugliest version of the product you can, like, you should be embarrassed by it. Like, To an extent, I agree, but to an extent, I don't agree. Like, you shouldn't be embarrassed if you've spoken to your customers already and they've told you what they want. Like, there should be elements of it that are already there. So you're not going to give it to them and be wholly embarrassed because they're features that they requested. So I think it's being comfortable listening to what a user wants. It's being able to understand feedback. It's been able to quantify that as well. And so 10 people have asked for this feature set, so we could probably build it. If one person asks for it, or 10 different people ask for 10 different feature sets, it's very different. So it's been able to go, let's document all of that. Let's see if there are any trends within this customer set, and let's evolve and build the product around the main themes. And so, yeah, I think the best products are the ones that help the user or the customer solve the problem the best. There are elements where you do have to make it very user friendly now. You have to branding is so important, I think, today, and it goes neglected a lot of the time. Whereas as humans, we gravitate towards nice looking things. We gravitate towards branding. So being able to tap into that psyche as well is really important. But yeah, not overcomplicating it as well. You might have the best technical product in the world, but too complicated for somebody to use. They're not going to use it. And 9 times out of 10, 75% of that product never gets used anyway because the customer actually doesn't want it. So I would rather focus on the 25% that customers actually want, make it look nice, make it feel nice, make it really easy to use, and keep the feedback loops open, keep understanding how they're using it, what could be better, get feedback on the experience. And yeah, so I think there's that element, and also being, like I said before, being agile, not being afraid to start again, rip up a piece of paper and start again if it doesn't work. If it's not quite where it needs to get to, don't get emotionally attached to that line of code. Get rid of it. Do something else that fits the need. And yeah, I think that to make a good product, you need to put the end user at the center of it, because at the end of the day, if they're not using it, you don't have a business. It doesn't make sense to not do that in my eyes.
Yes. And I think one of the key points you raised is feedback loops. How do you do it? Because we hear that word everywhere, right? Yeah, feedback loops. But for someone who's new to fintech or new to the startup world, how do we practically implement a feedback loop? How do we think about it?
It's not like, it's difficult when you're trying to sell a product that you don't know people want. So if you've already spoken to customers prior to building a product, they're already engaged. You sell them, or you build a product and you give them a product that they've asked for, they're still going to be engaged because they've been with you since the beginning, right? So every month, just, hey, how are you getting on using the product? Let's jump on a 15-minute call if you've got any feedback. If you don't want to jump on a call, here's a Google form, enter some information into here, or just send us an email. Like, it doesn't have to be rocket science. I think the benefit of working with customers from day zero is you get that buy-in from them as well. You get that engagement where they actually want to give you feedback. They're not too fussed if something breaks or something doesn't go quite the plan. Quite open to being able to give you constructive stuff. Like, you've probably done it with peers and colleagues and people that where you test their product and you give them feedback. Like, we overcomplicate how we should be running feedback sessions. And it's all about just being super open, super like, just have a chat with me about it. And just try to make sense of any data that they give you. And then like, it doesn't have to be, especially in the 0 to 1 phase, it doesn't have to be any art or any file. It can be super manual and clinical.
Yes. And I love that point because, let's say, in the LinkedIn and product entrepreneurial community, there is all this narrative about doing it the right way. And it adds tons of frameworks and complexity. And at the end of the day, all you need is to chat with the customer.
100%. All the way up to pre-seed, late seed. It's not necessarily about the most efficient frameworks or processes or organization. It's about figuring it out.
Yeah.
And you can get so bogged down with setting these enterprise grade framework for $10 million contracts and and you're trying to get one customer to pay £1,000 a year. Like, they're not the same thing. And so I think there is an element of just get your hands dirty, just ring them, text them, email them, get them on a Zoom call, take them out for a coffee. there are so many better ways to do this than actually trying to lock in a framework too early. And I think obviously when you get to a certain scale and your team's a certain size, your customers are a certain size, sure, build the frameworks, but you've got to know what goes into those frameworks, because you can build the frameworks and the data that you get doesn't hit any of the points in that framework. So it's a point framework that you've got to understand actually a little bit more about the process before you can build the framework anyway. So yeah, I just think I'm a big believer in just getting it done. So if I need to find out, I'll get it done. I don't need to build a framework around it. I'll get it done. I'll scribble some notes down. I'll take it back to my team. We'll make sense of it. That's it. It's
Also,
not
practical.
well,
It's like practical.
you need to be practical, and speed is the biggest thing in this. Like we were saying, everything's evolving so quickly. So you need to do things at speed that don't necessarily scale. But you've got to optimize for speed in the early days.
Yeah. And I would say even in the medium days, let's say, because like we're large now, we're not a huge, but still.
You're in that interesting spot, right? You're in that, we're going to grow into this enterprise, but we're too big to be a small company. Like you're probably between what you think you should do and what you're actually doing.
Yeah.
So
we're preparing to grow.
Yeah.
But we're a grown up right now.
Yeah.
But we're preparing to be a super grown.
Yeah. We prepare to be an adult.
Sense. Yes, exactly.
But that's it. If you think about that in human terms, as a kid, you think, I can't wait to be an adult. I'll know everything. And when you get to an adult, you're like, I know absolutely nothing.
Nothing.
That's exactly the same thing, right? You've got to just keep finding out.
Yeah, definitely. So coming back to Lemon and customers, I love your product because as a podcasting person, exactly, I've been doing this for 3 years. I didn't know anything about podcasting. So I've tried and tested all tons of tools, and it's a pain. Either to know when I'm going to get charged, to use the right card to have the best effects, and then I don't have enough balance, and then I'm like, oh my God. And then I tried another subscription, and then that one does go through, and I'm like, oh my God. I wish somebody built these. And you have.
Yeah,
so
we're starting.
It's awesome. Yes. So what? I just spoke like a customer, right? But if I ask you, who are your customers? Like, how did you segment them?
So we found with the subscription management product, we actually found a really interesting use case with agencies. So people who have lots of, let's take marketing agencies for an example. There's probably 15 to 50 people in these small marketing agencies. They're all different departments. They rely heavily on software to help them deliver their product. There's a lot of crossover between teams. They're not necessarily thinking about finance or subscription management. They're thinking about like everything high level. So how do we keep our expenses in line with our retainers? And why we like that is because they're not venture backed, so they don't have money to burn. They're typically a little bit hand to mouth, shall we say. Every month it's like a cash flow thing. And yeah, we found a bit of a sweet spot there. Through trial and error, we tried a few different segments. And yeah, it seems to be 15 to 50 person agencies that have really taken to the subscription management product. And we've just focused on that. As soon as we saw an inkling of interest from that sector, we just thought, let's just focus on this sector for the foreseeable, and we'll evolve after that. But yeah, it was about speaking to a lot of different demographics and a lot of different business sectors to see where the pain points were the most relevant. And again, we found it with agencies. And I mentioned the customer saving like $5,000 a year just by using, that was an agency. They're like, oh my God. So we've got 3 subscriptions to the same product. So 3 people have subscribed using different cards, and it's just messy because they're not necessarily set up to communicate about subscriptions. So we built that in as well, so teams can chat to each other within the app. And I know we've got a subscription to this already, so we don't need to go and get another license kind of thing. But yeah, how we've identified that and how we focused on it. With the lending product, it's been a little bit different. With the financing thing that we're building, it's a slightly different customer profile, and it's a slightly different demographic in terms of that financing product initially worked for mid-market and scaling companies who are maybe 5 or 10 million in revenue that need to now optimize cash flow and spend before they get to their kind of net funding round. But yeah, there's two audiences that we're catering for at a minute. We're causing a little bit of confusion. We just figure it out by testing it on various different people. Yeah.
Yeah, because I was thinking, looking at your pricing, I was thinking, oh, your real valuable customers must be the bigger ones, right? And the savings that you're giving them have to be large, because if you're charging like almost 500 a month,
Yeah.
that's a lot.
It is a lot. And so what we thought, or what we found actually, that's again built on research. So we thought a free product would be best because it just helps as many people as possible. There's no financial barrier to get into. But actually what that means is, as a business or a customer, you don't really care about it. Like free, you might use it once and never come back because you're not paying for it. So actually there was a bit of a research piece with some of the bigger customers that we were looking to get, like how much, and we'd ask them how much for this. Some customers would say, we're paying £2,000 a month to have a solution at the minute, or we're paying £300. So we're trying to find something in the middle. And actually what you find is once you get into bigger customers, obviously the contract are bigger, the saving percentage still remains the same, but on a cash basis, it's more significant. So 20% of £500,000 a year is quite a decent saving. So £500 a month now all of a sudden seems feasible.
Nothing. Yeah.
Yeah, exactly. And it's the same with the lending. Like the finance product is going to be like super accessible and affordable for anyone who wants to use it, because the savings are going to be able to drive are going to be really significant. But yeah, pricing is the hardest thing. I've never had an easy journey with finding pricing. But yeah, again, it's trial and error and trying to figure it out as you go along. And actually the free plan that we've got now is only going to be free for the next couple of months. We're actually turning that into a priced plan. So good job you signed up now, because you won't have to pay. But yeah, the customers that have signed up on the free plan now, it's free forever. But in a couple of months, it will turn into a nominal fee, just so you can pay a bit more attention to it.
Yeah. So we've been talking a lot about Lemon, but I think we have not expanded on what's the product as such. Can you guide us a little bit? If I come in as a customer, what do I see? What do I do? What are the feature sets?
So if you're a new customer starting with Lemon today, you'd set up your account. So you would just put your email address and the kind of basic information in. You'd then you get access straight away to some kind of multiple choice things that help you set up your organization. So what's your company name? What department do you have within your company? And do you want to invite any team members into this product as well to help you build this single source of truth? Once you've gone through all of that, you then get your dashboard, have like a running total of how many subscriptions you've got, how many of them would be free or paid for. So you have a base dashboard. Then you've got two ways to upload your subscriptions essentially. So you can do it manually. So anything in your head that you use Adobe, that you use Slack, you can just brain dump everything into the Lemon platform. You don't need all the information up front. So you can start by listing all of the other way to do it is if you've got a spreadsheet, you upload your spreadsheet. We've got some AI in the background that will then extract that information and put it all into your dashboard for you. But a lot of people don't have accurate spreadsheets either, which again is part of the problem. And so if you were to add a subscription manually, shall we say, you basically just say this is a free or a paid plan. This is how much we're paying. This is the person that owns it. So it could be you, it could be your head of marketing, it could be whoever. And you can put any notes on that subscription as well. So you might say, we're going to cancel this at the end of the month, or we need to upgrade our seats in 2 weeks, whatever that might be. So the ability to, note it, but also collaborate with the other people that are in the system that you brought in so they can see where you're at as well. And once you've completed that subscription, once you've completed to add in that subscription, it will just go into your dashboard then. So you'll be able to see Slack, it's £20 a month. We've got 4 seats. Monica's in charge of it. The next payment is coming out in 3 days. The contract expires on the 28th of September, 2024. So you'd be able to see everything very accurately. Yeah. And so every subscription that you bring in, you can see everything in that view. And then you can filter everything by saying what expiring in the next 30 days, or what subscriptions are free that we're using, what subscriptions are paid that are coming out of Monica's personal account rather than the business account. what subscriptions we pay on direct debit versus credit card. You can see all of that kind of stuff in there as well. And yeah, you can really start narrowing it down. And obviously we then flag, like when a subscription coming up for renewal, we'll flag that in the system as well. The next time you log in, it'll say this one is about to expire. If you're going to cancel it, make sure you cancel it because it's on auto renew, that kind of stuff. But that's in the subscription management side. The financing side is a bit more intricate than that.
Yeah, but now that you describe it like that, and I start to seeing it from, let's say, work perspective rather than the small podcasting subscriptions, I can see the value because subscription management in a medium to large company, it is painful. Everything that you described, I can see how that adds a lot of value. Like how many people you pay on Slack, on Jira, on Miro, and
exactly. There's so many, and we had one customer that thought they were paying for 9 Google accounts, where actually they're paying for 45, and they're like, "Oh, okay, that's way more than we thought you were." So like you can see where you're overspending a lot easier as well. And actually, what we find the most valuable exercise, I think, is that setup. So that first month where you're using the product, you're almost doing an audit. So you're reevaluating, looking at all your subscriptions, you're finding them, you're digging them out in places, and it reminds you that, oh, we don't need that anymore. So we go and cancel it. So you basically create this audit with a really nice kind of back end that helps you with. And yeah, we found that to be like super valuable. But yeah, there's a lot of things in there that help on the subscription management front. The financing side, again, is going to be super straightforward, where you'll be able to see where you can save money, essentially. So we'll know that you've been with Slack for 12 months, you've been paying them for however long on a monthly basis. And we know that the annual plan is 40% cheaper than what you're paying today. So then we can identify that you should probably commit to that annual plan. We will finance it, and you just continue your monthly payments back on a lower rate. So that becomes a lot more kind of intuitive to the platform as well. Yeah, and make life a lot easier for you to now reduce your costs even further.
Yes. And I'm assuming that you are a great example of embedded finance for lending. As in you didn't go and build your lending product and have a lending license. I'm assuming. Yeah.
we tried and failed. So that was last year. Yeah, we tried to become our own lender and try to raise obscene amount of money to do our own lending, and it was just very difficult. So now essentially we partner with bank and credit funds and basically originate it on. So there's a value for them on that side as well. So for a bank, they want to get more money into this asset class, which is software contract. Don't really know how to do that at scale because they're bankers, they're not tech people, don't know how to build a relationship. So we basically front end these credit funds, and we become like a gateway tool that connects the software teams to the financing source. So yeah, we just sit in the middle and make sure everything happens smoothly, which is a much better place to be in than doing our own lending.
No, it's very complex. This will be probably off podcast. Have you heard of Weaver?
Yeah.
Yes.
Weaver,
okay, cool.
We use the same PR companies. Yeah.
This one. You have an amazing product. Is not just about knowing customers, but it's also about building it. And that's another challenge on its own. Mm-hmm. In your many years of experience, what has worked? What has worked? What makes it easy to build?
I don't think it's ever easy to build, but I think when you identify a real problem, it's much easier to attract talent that come and build it. I'm not a technical person. So like you need technical resource to come and help do that. So you need to find real problems within the space that you want to operate in. You've got to find areas where your product can add purpose and add real value, and not just become the next phase or the next hype thing that you think sounds good and actually in theory nobody uses. And again, being agile, like building stuff takes time as well. Like I initially underestimated how long it takes to build a technical product. You've got to go through those iterations, build your MVP as quickly as possible. There's lots of no code and low code type solutions out there if you don't have developers. Build that, get feedback, build on top of it, or scrap it and start again. It all comes back to everything comes back to what does the customer want? because that
Yeah.
dictates how easy or how hard things will be. I'm a big believer in trying to be quite public with building as well. I don't necessarily say I like the building public model, but I don't typically shy away from saying what we're building. And it's not to be like, oh, here's what we're doing, come and sign up. It opens you up to potentially some really good feedback.
Yeah.
It also opens you up to it opens you up to competitors. It opens you up to people who might not like what you're doing, but it gives you the opportunity to receive feedback from people that you'd want to receive feedback from, and also find new customers and potential customers. Yeah, you've got to have within early stage. I don't think you can do it all by yourself either. I don't think you can be the technical person, the customer person, and the commercial person. It's very difficult to find that mix. So I think having technical people, like my founding team, I was very specific. It was going to be me on the commercial side and the customer side, a head of product and a head of engineering or CTO. So the CTO can build all the stuff. The head of product can take what I've learned from speaking to customers, productize that, and make sure that workflow is being built by the CTO. There's a really good kind of mix of skill set there. And I think that's also super important to have. So not one of us is getting blinded by our own theories. It makes it a way more objective. So yeah, that's been that in the past I've done it on my own, and it might start well, but it goes wrong pretty quickly. I think having different skill sets and different types of people around the table from day one make all the difference.
Yeah, definitely. Because it's so easy to get biased with your own thinking. You just like, blah, 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 you find your own evidence everywhere.
Yeah, exactly. You make it up.
Yeah, exactly.
And that's why I quite like the team that I've got now. Will say, right, well, that's great. Where is the proof of that? I'm like, I need to go find it. It's not just, let's build it because Matt said to build it. We need to make sure we're building the right thing.
Yeah, perfect. So you also talk about the underdog mentality.
Yeah.
Can you expand? Yeah, can you?
Yeah, I think it's about being in business or having a startup. The odds are stacked against you. Like, nobody should expect to win. Like, nobody should expect to start a business and become a millionaire overnight. It's just not the way it works. It's way worse. It's horrible. It's not. There are easier ways to make money if that's your thing. But I like the fact that what gets me out of bed on a commercial aspect is there are people within bank, technology, finance, fintech that look at what we're doing and are like, I don't know about that. Don't know if they've don't know where the value is, or they're going to say no, or get off the ground. And I like knowing that they think that, because it makes me go, prove me wrong now. It gives you something, for sure. And it's my education. I didn't really I'm not qualified to be where I am. Don't have an economics background, don't have a finance background, didn't go to university. I only got 4 GCSEs at school. Yeah, I can speak to a partner of one of a massive bank that says, where did you study economics? And I said, ask me that. But with the view of stuff.
That really well. Where did you study?
Exactly. Like, you must have learned it somewhere. And I'm like, no.
Oh, cool.
So I like having being able to do things that I'm not on paper qualified to do. Some of the partners that we have now, some of the bank people that we speak to, even people with MBAs and the paper qualification, probably haven't had the opportunity to. And so I quite like that fight that I will outwork anybody who's smarter than me to beat them, essentially. And yeah, I think I like having the odds stacked against me. I like being pushed into a corner. I like when my back's against the ropes, because it makes you fight for your life, right?
It's back.
Exactly. You have to swing or you're going to die. So I like having that. And just because there's nothing on paper that says I should be doing this, gives me more reason to actually want to do it. Sure, I want to prove people wrong, but you want to prove it to yourself as well.
Yes, it is to yourself.
It is, 100%. I'm like, I want to be able to do that. Sometimes I have to pinch myself because I'm like, I can speak to whoever. Like, oh my God, you spoke to so-and-so from Goldman Sachs. I'm like, yeah, I'm well. Like, it doesn't, I have to take a step back and go, that's actually quite a big deal. But I just like to, I like, yeah, I like being like trying to find that opportunity where you can succeed when everything is telling you that you're not going to.
You're like a proper, not proper, but yeah, an entrepreneur at heart.
Oh, for sure.
Yeah, because I find, not my guests, but I find other people that I've met that they get into building a fintech or starting a tech business because it's the cool thing to do and it promises money, and I'm like, no, it's not cool. It doesn't promise. Doesn't give.
So,
I,
well, that's it.
it's the
It's probably the
grind.
furthest. It's the furthest away from promising money
Yeah.
ever. There are
No, it's
much easier ways to make money.
yeah. And what's your money mindset then? That you're like, oh, I can continue doing this and likely I will not get all the money. Or I could go another way and find money another way.
I don't think I'd ever go, I'm going to quit and go and get a 6-figure job somewhere. I just don't think that's me. I think I will I will create money. Like, I don't doubt myself with that. And I think that I want to do that with my own thing. And I want to do that for myself. And it doesn't matter. Like, I've been doing this for 12 years now, not this fintech, but I've been doing startups for 12 years now. If I went into corporate life 12 years ago, I would probably be miserable, but I'd probably have a lot more money.
Yes.
While it doesn't drive me, it's a nice, obviously, to have the work. We need money to live. And we want to do things, but it's not the thing. I don't go, I want to be a millionaire, so let's go to work. It's not about that at all. So I think money is a byproduct of just doing something that you're deeply engaged and interested in, which I think Lemon is the most deeply engaged product I've worked on in that 12 years. It aligns my interest. It aligns what I actually want to do. And so that itself is better for you than chasing money. It keeps everything a lot more exciting. Because if you're just chasing money and you don't get it in 12 months, you see so many people doing that. Oh, I need to make 200 grand a year by the end of my first 6 months in business. They don't hit it, they're disappointed. And it's, no, yeah, it's going to take you a long time to get substantial money. I thought it's all or nothing. Like, you very seldom see a business that's sold for an okay amount. There's always the good exits and no exits.
And
you don't go, oh, we're happy because we've sold for £2 million. No one's ever said that. Do you know what I mean? So it's like you either sell for £100 million or you don't sell at all. There's no real in between. And I think, yeah, you're all in or you're all out is what I say.
Yeah, I loved your mindset. Yeah, I like that. And it's a great reminder for everyone listening as well, that it's not about the money. It's not about a salary. I think many people in fintech, with layoffs and fundraising, drying up, this, the other, you hear all this narrative of, and then fintech talent from startups, they are going to the big banks. Mm-hmm. But I've also heard that then they leave exactly because of that.
I think that's what you realize when you work at an early stage startup. You realize how much better it is, like how much more impact you're making, how much purpose you have, and how much you can change the trajectory of that business. But then, yeah, you go, I was going to work for it because I'll get paid 150 grand a year. You get there and you realize you're cogging this massive machine that can't really make any decisions. Soon enough, the money is like not the driving factor anymore, and it's about having the impact and the excitement within your day to day. Don't get me wrong.
Yeah.
Like, working in corporate is for some people, but we're not founders. Like, you've got to have two different mindsets for sure.
Definitely. So what are your biggest challenges then?
Our biggest challenges are, it's really interesting. So on the subscription management side, we got, like, how do we scale the customer base? Like, we don't really have a sales or marketing engine in place yet. Obviously, we've established a free product. So how do we switch that out of free into paid? That's that. On the financing side, which is where I'm spending most of my time at the minute, is more around how do we integrate with banks? How do we integrate with lenders? What are their real value drivers as to why they're using this? And speeding up those processes, because dealing with banks inherently takes a while. It's about how do you get through those doors a lot quicker. And we're speaking to some of the biggest banks in the world, some of the smallest banks in the regions. We've got a big spectrum, and it's about understanding how do we get that product up and running. So we're going live with one bank very soon, which is great. But it's like, how do you scale that into bigger banks and more kind of lending capability? So it is more around, again, how are we solving their problems with our product? There's uncovering that
Yeah.
scale.
Yeah.
Yeah, they're our biggest problems. Because I've been doing this for a couple of years, I don't necessarily see many things as problems. As a challenge. It's just part of business. You just got to get on with
Yeah.
it.
To just
Okay, you haven't got enough. We haven't got enough resource. Just part of the business. Like, we'll go and find it. It's not nothing.
not a problem.
I don't see it as a negative. I see it as something you've got to work on.
Oh, cool. As we reach towards the end of the episode, then my final question to everyone is, if you were to change one thing, it's just one thing, in fintech that could have the most impact to customers, staff, and shareholders, what would that be?
Customer guarantees on.
Ooh.
Yeah,
Can you expand?
I would remove them because as a business, if you want debt, you have to personally guarantee it. And it almost defeats the object of having a company. Because if you set up a limited company, you should be disassociating that with your personal financial stuff. But when you've got to guarantee a loan, for example, you've got to guarantee some debt, you have to put everything on the line. So your assets, your house, your money, you're responsible to pay that back if everything goes wrong. What that actually does, though, is in an instance, it stops people accessing money because they don't want the personal guarantee. Therefore, they can't grow their business because they actually isn't available to them. But those that do take personal guarantees out, and then their business for one reason or other doesn't go to plan, they can never start again because they've got this amount of money now that they have to go and find sources to pay this back. And you might be able to set a payment plan, but 2 or 3, 4, 5 years, you've got to pay back a couple £100 a month. You're really restricted into what you can do. Then you have to give up being an entrepreneur. You have to go and get a stable job just to fulfill that obligation. 20 grand, 50 grand to a bank.
It's nothing.
Yeah. Come on. Like, it doesn't make too much sense in my view. It stops people accessing capital rather than giving people capital. And I just don't think there's a net benefit to them. So if there's anything that could change about fintech, or if anyone's solving that problem, I'd love to speak to them. But yeah, definitely something I would solve when the time comes.
Yeah, that is for the lenders and the big banks to be like, hey, change it. Yeah. Disrupt yourselves.
Yes, exactly. Everyone's scared. Problem we've got in the UK, everyone is far too risk averse and cautious, where sometimes you just need a sprinkle of optimism. And actually people will thrive under that optimism rather than maybe be held back. Because what you find is if you remove personal guarantees, a lot more debt would go into the market and a lot more businesses would succeed. Sure, people will go out of business and they might stop paying, but they might go again and create something bigger. You need to take a longer term view on it and not really just constrain people and stop them from growing.
Cool. Matt, it's been an absolute pleasure having you in the show. Thank you.
Thank you so much
for your time and your wisdom. Yeah, it was so much fun.
It's been really fun. Really fun.
Thank
I enjoyed
you.
it.
Yeah, me too. Awesome. Thank you so much, Matt. Everyone, see you next week.